we've made it to the middle of day 2 without mentioning cryptocurrencies yet, which I think is quite an achievement, but that is going to be about to change. We have spoken a lot during this conference about technology and disruption, and we'll now be looking at an area in financial services, which is asset exchanges, and how these are being disrupted, not just in the digital space, but more broadly as well. I'm very happy to welcome to the stage the Chief Technology Officer of SkyBridge, Vivek Dhayagude, who will be moderating a panel with His Excellency Khalifa and Mansouri, Tom Gallagher, and Basil Askari. Please join me in welcoming Vivek and his panelists to the stage.
Good afternoon. My name is Vivek Dhayagude. I'm the Chief Technology Officer at SkyBridge Capital. Rachel, thank you so much for the introductions, and thank you so much for getting my last name right. Usually that's the hiccup for every introduction is they mess up my name, but she did a great job. We have a fantastic panel on hand today. We're talking about the disruption to traditional exchanges. Exchanges have been around for hundreds of years. They form the backbone of our financial industry. But what is fascinating is how the exchanges have transformed in the last few hundred years. In fact, the first exchanges opened doors in the 1800s. But the transformation that has happened in the last 20 years has been phenomenal. The transformation primarily driven by regulation and technology. What regulation has done is it has brought new products, new instruments, new asset classes to trade. What technology has done, and I think technology has done this in all industries, it's leveled the playing field for new businesses to come in and compete with established businesses. Just in a very short period of time, newer, innovative companies are now able to compete in this space. One interesting observation with regards to technology is, and this is something my daughter brought up, is when she was doing some research for me on this topic, is just 10 years ago on the trade floor, if I wanted to buy 100 shares of the S&P at market price, I did give me 100 shares of the S&P at market price. We were using hand signals. Today, we're still using signals. Machines are using market signals and trading electronically. So just a fascinating transformation is what has happened in this industry. In terms of volume, 10 years ago to date, NASDAQ, New York Stock Exchange, for the first time announced that we hit 1 billion shares, traded 1 billion shares in a day. 2019, every day in 2019, we've been trading between 4 and 6 billion shares every day. So technology has just transformed that landscape. It has allowed disruption to come in and compete against established exchanges. Today on stage, we have a wonderful panel. Each of the panelists here are leading innovative, cutting-edge exchanges. They have first-hand knowledge, first-hand inside information on these exchanges, and really looking forward to getting some of the insights from them. It's my pleasure to introduce the panelists. To my left is His Excellency Khalifa Al-Mansouri. His Excellency is the Chief Executive of the Abu Dhabi Securities Exchange. Prior to ADX, His Excellency was the Undersecretary to the Department of Economic Development, Abu Dhabi. ADX, in a very short span of time, has established itself as one of the premier exchanges in the region, and we're really looking forward to hearing His Excellency's insights into ADX. Tom Gallagher, Chairman and CEO of Miami International Holdings. He's also on the board of the Bermuda Stock Exchange, as well as the Minneapolis Grain Exchange. MIH, the company that Tom runs, have 3 fully electronic options trading exchanges. They've got some amazing technology, and they have, over the years, just grown exponentially. Would love to hear Tom's insights into this asset class that you guys work in. Basil Askari is the CEO and co-founder of MidChains. Prior to joining MidChains, Basil was an investment professional on the private equity team in Mubadala Capital. Blockchain, my bad. MidChain is a blockchain digital asset exchange. This is the latest and greatest what's happening in the exchange world. We would love to hear some of your insights and also get a sense of what's actually happening in the regulatory world as far as this new asset class that's being introduced for us to work in. So to get right into this subject, I'm going to start off with Your Excellency. If I can just get my questions right. So I believe ADX has had a good year. 2019, you guys have put some good numbers together. Can you tell us more about the exchange and the performance you guys are seeing?
First, I would have to thank you for inviting me to be part of this session. And ADX was established back in 2000. It's the second largest exchange by market cap in the region. We have about 70 listed companies, 10 debt instruments and other instruments traded in ADX. 2019, we were blessed. We consider a recovery year. The first 11 months, we saw an increase in trade value by about 33% compared to the first 11 months of 2018. We also saw an increase in the number of investors, number of listed companies, market capitalization. We saw an increase of about 7% compared to last year. So this is in a nutshell where ADX is in 2019. We've also launched several initiatives to increase liquidity, visibility, and promote those listed companies to a wider base of investors.
Anything specific they can think of that gave you that advantage in 2019?
I think it's one part is the sentiment and one part is the effort from the international investors to reposition themselves within the region. And ADX has been stable. Over the last 10 years, we've been stable. We did not see a lot of volatilities when it comes to hot money coming in and out. So we saw 2018 was one of our low years. So the recovery is a good recovery when it comes to the first 11 months.
Excellent. Tom, I was doing some research on MIX, and it's just a fascinating history. A short one, but a fascinating one. Just quick insight. So what asset class does MIX operate in? And why did you choose to enter this space?
That's a great question. And thank you as well to the SALT team for hosting us. And Abu Dhabi, my team and I have felt extremely welcome. So thank you very much. It's been a great conference. We chose the multi-listed equity options back in 2008 as the first asset class to go after for a couple of reasons. Number one, from 1999 to 2008, there was 20% compounded annual growth in the amount of options contracts that were traded in the USA. And I thought that the team that I assembled, which has a deep background in derivatives trading technology, I thought we could take advantage of that because I saw a lack of investment by some of the incumbents. So with having a good technology team, we wanted to start with something like multi-listed options. On each of our exchanges, it's an interesting stat, we're trading 1 million securities on each exchange every minute of the day with 3 exchanges. The New York Stock Exchange trades less than 5,000 securities. So the computerization, the technological innovation that we had to do to trade 1 million securities, we thought that we could put this technology advantage and the growth as the reason to start in options.
So why 3 exchanges?
The reason there's 3 exchanges is the government only allows you to operate 1 model per exchange. So my first model at the time was probably 75% of the market. Traditional pro rata allocation model, traditional pricing. Then I saw a shift into a more equity-type model, the price time. Whoever gets to the matching engine first gets the trade, regardless of how much size you're showing. So the third model is a hybrid of the first and the second. So basically 3 different market models depending upon the customer base. And those 3 models now give me access to 75% of the US space. We don't have a floor. The other 25% is still traded the old-fashioned way in an open cry setting, either in Philly, New York, or Chicago.
Interesting. So we've got ADX 10 years. We've got
7 years old on Sunday.
7 years old on Sunday.
Yeah.
And we have Basil here, who is in the midst of putting together, I think from a technology point of view and an asset class point of view, it's very interesting, and it is something that is on the cusp of taking off. Interesting space that you're in Basil. So you're in the midst of setting up a new exchange. Tell us a bit about the exchange and the asset class that you're looking to trade on the exchange. Also, the impact that regulation has with regards to what you're doing.
So I'd like to thank first SkyBridge, Mubadala, and ADGM for hosting such an amazing conference. And with that, a brief on MidChains. So MidChains is a crypto asset exchange and custody business. And why I say custody as well is because we do both, and it's part of our business model, which wouldn't have been possible without blockchain as a technology underpinning our exchange. On that means that over the longer term, we're going to be looking at growing into a digital asset exchange, which is multi-asset class in nature, tackling any kind of tradable asset that can be listed and custodied on our exchange. But with that, I'll stay and focus on the crypto side of things first, since that's people are quite interested in crypto, particularly Bitcoin is a great case study. And when we look at asset classes that have evolved, new asset classes in recent years, ETFs and ETNs were sort of the big thing maybe 10 years ago approximately. And we can see a lot of parallels between that and crypto, and Bitcoin in particular, in terms of growth. The unique difference between them is that one was driven by institutions to develop, and that would be the ETFs and ETNs, to develop a tool for arbitrage and a tool for uncorrelated risk management. And Bitcoin is starting to evolve into the same thing, as well as other cryptocurrencies that are coming up. We looked at an analysis to sort of look at the difference between a portfolio with and without Bitcoin. So it's standard multi-asset class portfolio, 60% equities, 40% fixed income. Out of that 40% of fixed income, if you switch out maybe 20% of, so out of the 40%, you've got 20% that are usually allocated to T-bills in most investor portfolios. Take only 1% of that, switch it to Bitcoin, and you've enhanced the risk-adjusted portfolio returns by 2 to 4%, depending on when you're looking at it over the course of the existence, since probably from 2012 to today. We see that as an extremely important use case, a use case that has been proven, but one that needs to be governed by regulation and provided by infrastructure players like ourselves, who have approached developing a market with the guidance and supervision of a local regulator that's been absolutely fantastic in terms of working with us, developing new regulation for the space, and promoting the growth of a fintech-driven exchange that's coming up.
It's interesting how regulation usually gets a bad name. We always have this saying that it's over-regulated. But in some of these newer technologies, regulation does play a very vital role in legitimizing the products that are being brought to the market. I'll get to regulation to the three of you and get your perspective on regulation. But just to switch on to technology, Your Excellency, innovation enables disruption. And we've seen this across all industries. I know ADX, big part of ADX's business is around innovation. Can you give us some insights into what ADX is working on?
Well, as you said, the innovation is an integral part of our DNA. We were one of the first exchanges to adopt new technologies to allow listed companies. For example, we adopted blockchain for listed companies to do e-voting. And this was, for us, a pilot to expand into other areas. We are also, we did digital transformation maybe 2 times in the last 5 years. We're going the 3rd time because of the rapid changes in technology and the speed. And we are looking at what others are doing, and we are partnering with academia, with companies, with other exchanges to look at opportunities where we can create value with innovation. We understand the nature, the disruptive nature of technology, and we are trying to accommodate and steer that technology toward offering our products and services to a wider base of investors. At the end of the day, if you're not on the innovation train, you're left behind on the station. So this is part of our strategy, is to be one of the leading exchanges when it comes to adopting and implementing new technologies or innovative ideas to offer products and services.
It's interesting you talk about innovation being a core part of the business strategy. I think technology and innovation around technology was always a cost center within businesses. Today, I think in the last 10 years, technology is truly becoming a revenue generator for businesses. Businesses are realizing that there's a need to embrace technology, adopt newer innovations that are out there, and it's companies and exchanges like what we have on the panel here today, where they're really pushing the limits of technology, and they are seeing success. There was a lot of pessimism around technology, but I think what we've seen in the last 10 years is that's no longer true. Technology does pay.
I'll add one thing just to, and this is to concur with you. We just did a reorg structure, and we added a new function called technology. It's not an IT service, it's technology, because we understand the value that technology is what will be driving exchanges in the future. If it's data or if it's infrastructure, technologies and softwares that allows segments of investors that were not, they're untapped investors to access and use the exchange business platform.
No, I think you guys are viewing it, you're definitely viewing technology in the right lenses. Tom, I have $1 million question for you.
Sure.
How did MIX become a multi-million-dollar company in such a short time? So the initial question was, in terms of growth, you guys are the forefront. I think you're the #1 as far as growth was concerned. I just thought I'd change that to the $1 million question.
Well, it starts with people. We've talked a lot about technology, but one of the most important assets I own, we are involved with, are the people that go up and down the elevator shaft every day. And if you forget that fact, that the most important asset in your organization, if you forget that it's not your people, you'll never be successful. We launched our first exchange in 2012 with a lot of capital from the Middle East, and they were calling me the paper mache exchange. How is this guy going to start an exchange group and break into the incumbents that started in New York Stock Exchange in the 1700s, Philadelphia Stock Exchange. And we focused on hiring good people and retaining those people. And last year, we were #1 in the world. I don't say that boastfully, but to be #1 in the world when 7 years ago, December 7, 2012, we didn't exist. We got there because we focused on the people, the little things, and keeping them engaged and doing new things and coming to places like the Middle East and Abu Dhabi. I think I'm the only exchange represented at the conference this year from the US. So it's focusing on the people and it's focusing on the customers and getting engagement. We created a unique equity rights program that every time Morgan Stanley, every time Bank of America does a transaction on Miami, they're going to get rewarded with equity. I can't disadvantage Basil if he's trading unless I have the best price. But if I'm displaying the same price as Chicago, Merrill Lynch can direct that trade to Miami, and earn equity. So at today's date, our member firms own 30% of us. And again, we started with one symbol. Now we're up to 1 million different securities in each exchange, and we'll clear in almost 500 million contracts. We did 800 contracts our first day. Awesome. So it's people, it is technology, and it's a relentless pursuit of perfection. They asked me to give a few stats. We've been up and running now 7 years. We've had 2 outages. 2 outages with 2 million lines of fresh code. How can the young group have that kind of performance when NASDAQ, New York, SIBO have had probably 36 hours of downtime? We had a 7-second hardware failure, we've switched over. It's people. People can explain it as market fragmentation. It's developing good systems and also embracing regulation, which I'll talk more about later in your third question.
Thank you. Basil, I respect what you're doing. You're truly at the forefront. You're setting up what you're doing is not a small endeavor. Blockchain has been labeled as a disruptor. What other applications are leveraging blockchain in capital markets? And why should institutions care about this technology?
Sure. Before I jump into that, I wanted to add to what Tom was saying about people. And I think I completely agree with that philosophy. And for us, that's, I'd say, one of the bigger challenges in terms of starting up an exchange here is attracting and retaining talent and bringing them over to live in Abu Dhabi. But there's a lot of sort of initiatives in the ecosystem that are helping us enable that. Speakers of those organizations have come out and talked in different forms, such as Hub 71, the Catalyst Fund, all driven by ADGM and Mubadala, which is fantastic and allows us to do what we're doing today. In terms of blockchain as a disruptor, I see it as both a disruptor and an enabler, depending on how you want to look at it. We try to enable by partnering with big firms around the world who are reputable in the industry and financial services, whether they're infrastructure, whether they're investors, whatever they might want to do. But that's a very, very important part of it, and it's also part of the people story on top, over and above the people working within our organization is who are we working with and partnering with. In terms of blockchain as a technology, I think we talked a little bit about cryptocurrency as an investment asset class. It's definitely a proven use case. Using blockchain for investments in general, so for example, digital securities, digital commodities, digital currencies of versions of fiat currencies that are digital. There's a number of different ways to slice it and to store them. And the gains there for institutions trading on, for example, infrastructure that is built on this blockchain are enhanced efficiencies. As Tom mentioned, it's really important to have fees and timing on the technology in mind. And for us, being able to lower fees for our investors, being able to speed up settlement and clearing time, and to manage counterparty risk by attaching that custodian arm, and to do that for our client firms and retail clients as well is absolutely paramount. Outside of this, I think we're starting to see blockchain come into play in supply chain management, in inventory management, in voting, and in government, as well as record keeping for different types of sensitive data, given the ability for it to be transparent and highly secure.
Interesting. So you talk about blockchain, you talk about the exchange that you're in the process of putting together, and to show that there is commitment, there is true interest in what Basil is doing. Tom, do you have an announcement to make?
Sure, if you don't mind. I'm happy to announce today that Basil's company, MidChains, and MIAX, the MIAX Exchange Group, have signed an agreement, and we're going to make a significant investment in Basil's company, MidChains, and your colleague, Mohammed. And we're looking to do joint products together, licensing technology, joint ventures, and give ourselves access to digital assets in this region. It's one thing to grow in the US, but our real future is also international, and I'm proud to become your partner today and having this forum to announce that.
Thank you very much, Tom.
Thank you.
Congratulations. We're equally proud to have you on board, and we're excited for the journey ahead.
Thank you.
Thank you. So now we have 3 great exchanges that are out there. Questions across for the panelists. how do you attract investors? So what is your secret sauce for attracting investors? I'll start with Your Excellency.
2 ingredients: accessibility and visibility.
Very interesting.
As easy as accessing those platforms and being available on every platform, that's one ingredient. The other one is visibility and having your listed instruments available and visible to a wider investor base. And that's what we're trying to do through linking with other exchanges, linking the infrastructure when it comes to CSDs and other CCPs to allow investors to have, I would say, an easy, smooth journey getting in and out of those securities.
Tom?
The question was accessing capital or accessing investors?
How do you get investors to come to your exchanges? You can play with that question.
So we, in the US, to raise capital in an exchange, especially a startup, you cannot sell more than 20% of the equity to any one individual or firm. So we came out to the Middle East and we came to Europe and Latin America, and we told them that we could do something innovative whereby we would embrace regulation and we would really work on being a disruptor to give people an alternative. And it's resonated very well. So 1/3 of our capital has come from the Middle East, particularly Kuwait, Abu Dhabi, and Dubai. So I'm proud of that relationship as well. And it's also being honest and also not being afraid to fail and being accountable. Once you get an investment from somebody, the hard work of being accountable helps you get follow-on investments.
Thank you. Basil?
On our side, I would say having great partners is one of the bigger and most important things of what we do. And if I turn back the clock, when I remember Mohammed and I getting together and thinking about how are we actually going to do this back 2 years ago, we looked up case studies for various exchanges and how did they do it, how did they run their business models, and luckily we don't have a regulator that requires us to max out sort of how much ownership we can give away to different companies. But MyX was the case study for us, both in terms of attracting clients.
Which is funny, because it was just coincidental.
Yeah, it was actually a real honor to meet you for the first time, because I thought, oh wow, I've been researching what this guy does and how they ran their business, and we thought sort of replicating something similar in the blockchain space in Abu Dhabi in ADGM was a proven model for us to follow.
Fascinating discussion, wonderful insights. Thank you so much for your time. Thank you for the audience for showing up to this panel, and I wish you all the best on your journeys.
Thank you, Vivek.
Great.